So, very good afternoon to everybody, all of those joining us online and of course here in the room. My name is Titos Legacy. I'm the director of the African Department of the IMF, and it's a great pleasure to welcome my good friend and governor of the Reserve Bank of South Africa, Lesetja Kganyago, for another, what will hopefully be another interesting governor talk. We hope to discuss the issue of monetary policy in the aftermath of COVID in South Africa, globally, a scene in which you're very much involved, Lesetja. But before turning to that, I wondered if we could talk a little bit about the great Tito Mboweni, who passed very recently. Tito, one of your predecessors as governor, of course, and also Minister of Finance at a critical juncture in South Africa, but also I think a son of Africa in the broader sense, in that he played a huge role on the policy-making scene, particularly in central banking circles, but elsewhere on the scene. Huge figure, larger-than-life figure, somebody who always had interesting perspective on economic policy issues and developments on our continent. Deep condolences to the Saab family. I don't know, I wondered if you could say a few things about him, Lesetja, and what he meant to you.
Thanks for that. I think Tito would be remembered for his beautiful policy brain. He understood that policy is about making trade-offs. Importantly, he would not go with any proposal that is not based on evidence. And many people know of Tito, the central banker, but Tito got involved in the discussions and the formulation of economic policy of a post-apartheid South Africa before he even came into government. And for many people, for many working people, he would be remembered as the person who put the labor legislation framework that ensured that the legislation is now consistent with our democratic constitution. But he will always be remembered as governor number 8 because it is during that period that he made the biggest impact on policy. And so what did he inherit? He inherited a monetary policy framework that was described as eclectic, which looked at everything, and you never knew exactly what the central bank was focused on. And a year before he assumed the position of governor, the South African Reserve Bank embarked on a forex intervention journey that set back the country a good $26 billion in 1 week, and which led to significant fiscal losses. And so when he came in 1999, he had a sense that we needed a different monetary policy framework. And interestingly, at the time, there was also then a discussion in the Treasury that said, in the aftermath of that massive forex intervention and the losses to the fiscals, what would be an alternative framework? And he was coming in, and those were the discussions around inflation targeting. Strangely is that when we talked about introducing inflation targeting, his first reaction was, you are setting me up to fail, because it can't just be that it is the central bank that must achieve the target. And that was the journey which then led to South Africa saying, we need a buy-in of the politicians in arriving at an inflation target. So if I was to sum up his central banking legacy, got rid of expensive foreign exchange intervention activities of the central bank, introduced an anchor for monetary policy in the form of an inflation target within an inflation targeting, flexible inflation targeting framework. Thirdly, that he introduced significant transparency of for the central bank It used to be, I mean, I remember these things. I had just joined the central bank, and we were having a cocktail, and the governor walked in there and said that, oh, I have just changed the policy rate. And it's just like that, just change the policy rates and effects in the evening. And Tito said, no, this has got to be fair game. We will call a press conference, walk the nation through the rationale of how we arrived at our decision, and allow the journalists to question the governor about the decision that was taken. So he introduced transparency into the monetary policy. But he also understood that he was a big advocate of central bank independence. And he understood that the flip side of central bank independence is actually an accountable central bank. And so he initiated the process of briefing Parliament every quarter about monetary policy. After a year, he got really upset because there were days where he would appear in Parliament and the delegation from the Reserve Bank will be more than the number of members of Parliament who have attended the thing. And then he introduced the concept of monetary policy forums, and he says that if the politicians do not want to listen to us, we will go directly to the South African public. Interestingly, is that the politicians now want to come to those monetary policy forums instead of holding us accountable in Parliament. And lastly, his contribution to the region. Yeah. He was the chair of the Committee of Central Bank Governors. Did such a fantastic job as the chair of the Committee of Central Bank Governors that our colleagues in the region saw it as it was not just Tito Mboweni, it was the South African Reserve Bank. So subsequent governors of the Reserve Bank also ended up riding on the shoulders of Tito and were given the responsibility of chairing the Committee of Central Bank Governors. And it is because he built an institution that outlived him as an individual. That is the Tito I know.
Thank you for those words, Lesetja. I mean, you know, as you're painting this picture of him, I mean, it makes me miss him even more. My interactions, of course, were nothing like those you had with him. But the overall legacy for Tito, if you could say a little bit about what practical effect that had on growth, employment outcomes, because at the end of the day, these institutions, we hope, will have a direct effect on that.
You know, I mean, there's another thing that we would think of as we talk about the impact, those variables you are talking about is the impact on people. I think Tito would be known as the central banker who took central banking to the people. Because Tito didn't just talk truth to power. He could talk truth to power because he was an ex-politician and he regarded many of the politicians as juniors anyway, to the extent that when he was appointed Minister of Finance, he viewed that as a demotion because he thought that the governor was more senior than the politicians. And but for him, it was like when he wanted to talk truth to power to the parliamentarians in Parliament, and when they were not giving him that audience, he decided to talk truth to the people. Yeah. And that is what he did. He took as a point of departure the mandate of the central bank in terms of the Constitution of the Republic of South Africa. And the success of the central bank in South Africa is not measured in terms of growth and employment. It is measured in terms of price stability. The Constitution says the South African Reserve Bank must protect the value of the currency in the interest of balanced and sustainable growth. Weren't they students of history, the authors of our Constitution? They understood you cannot have balanced and sustainable growth in the absence of price stability. And they tasked the central bank with the responsibility of price stability. And so they understood that price stability is a necessary condition for balanced and sustainable growth, but it is by no means a sufficient condition, and that you will need the other institutions of government to then help to drive those growth and employment outcomes.
Thank you so much for that, Lesetja, which is, I think, a nice segue to the point of interest today, which is this huge surge in inflation that we've had globally, and which has begun to recede, as you said. In South Africa's case, of course, has come down quite a bit most recently. If you could say a little bit, and I've heard you talk quite a bit about this. If you could say a little bit about, how South Africa, as one of the large emerging market countries, has dealt with it. How you compared your experience of disinflation relative to other countries, advanced countries, also. So
you had access to the memorandum of the examination question ahead of the exam. We saw much earlier in 2021 that inflation was starting to rise. And initially we thought of the shocks, and that we would see through the shock. Problem is, it's okay to see through one shock. When you have a multiplicity of shocks, they complicate your policy posture. And so by November 2021, we started to tighten policy, or as my colleagues prefer to take it, we started to withdraw the accommodation. And we only did it in November. Latin American central bankers, it's like they are from the same womb. They can tell inflation coming from a distance, so they started acting as early as April. We only started acting in November. We still acted ahead of the advanced economy central banks. What it did for us was that we were able to take baby steps in the withdrawal of the accommodation. And the view was that if we waited, we might just end up with a situation where we have to take very aggressive steps, and that could come at the cost to output. And so we started adjusting policy from November. It was interesting because when I came here to Washington in April of 2022,
I remember.
There was this contestation of team transitory and team persistence and so forth. But as Jay Powell succinctly put it at the Jackson Hole session this year, that there was a ship full of advanced economy central bankers in a ship called transitory. And that ship hit stormy waters, but fortunately the passengers were all rescued. They got onto alternative vessels and realized that they needed to change course. And so advanced economy central banks started to tighten policy at the time. And for those who acted earlier, it was like financial markets were not rewarding those countries, but do you know what? The inflation outcomes actually rewarded us. And in the case of South Africa, inflation peaked earlier than in advanced economies, and it also peaked at a lower level. We peaked at 7.8%, but we do not have the flexibility that the advanced economies have. And so when the disinflation process started, the advanced economy central banks inflation came down much more rapidly than ours, and ours was sticky. And eventually, it did come down. And as it was coming down, there would be excitement. But once again, we found ourselves having to take the same view we took in the previous episode, that we first said there are shocks, let's try and see through the shocks, and then so that there are a multiplicity of shocks and calibrated policy differently. It was a similar thing this time around. Yes, we have taken policy actions from 2021, but for all intents and purposes, for a period of 12 months, we hadn't changed policy. We had kept it the same. But inflation came down. And of course, we could then say that our actions have eventually had effect. But there are people who would say that, you guys central bankers, you were just lucky. And I said, yes, I will take that. We were lucky, except that we manufactured our own luck. That is why the outcome then came in the manner in which we we had seen it, and the view was that we are now also experiencing positive shocks. How so? The global supply chain constraints have now been alleviated. Global oil prices had come down. We are a big energy importer. Our exchange rate had appreciated thanks to positive sentiment about South Africa after the election, and those things contributed to the decline in inflation. But more importantly had been that the key actors, whilst their expectations of inflation were away from our target, those expectations were not as high as we had seen in previous stages of inflation. And so one would say that the policy actions taken, the credibility of the central bank, and the positive supply shocks helped in the disinflation process. And so inflation is now just slightly below our target. And as I had warned earlier, a few weeks ago, that we will have a couple of prints of inflation below 4%. Our nowcast says that that would happen until June next year. It generates a lot of excitement from the analyst community to say, oh no, surely this creates space. But the policy horizon is not 8 months. The policy horizon is 12 to 18 months, and the picture is different in that space. But what is in no doubt is that inflation expectations will start gravitating towards the actual inflation outcomes, because the nature of expectations in South Africa is that, contrary to what we would prefer, they are actually backward looking, and they look at the most recent inflation print.
That's fascinating, Lesetja. So if I could just follow up, I mean, what have you learned from this whole episode? God forbid we have another period of inflationary, that's more of a global phenomena facing us, commodity price shock or oil price shock or whatever. What have you learned about that? That EMs need to continue tightening ahead of other countries to ward this off, or you have more strength than in the past, so that you can tolerate a little bit more, give?
But the notion that EMs have to tighten ahead of the advanced economies is based on the wrong view that what matters for capital flows and thus the exchange rate has to do with the policy rate. The work that we have done in South Africa showed that there is a very strong correlation between the South African 10-year government bond yield and the US Treasury yield. And I think that yesterday in the plenary, in the introductory session, the IMF showed that it is no longer just a South African phenomenon, but for many emerging markets there are correlations with that. So what matters is that 10-year bond yield for capital flows. So the adjustments to the monetary policy stance is thus going to have to be based on the economic outlook rather than trying to preempt what the advanced economy central banks do. Of course, what the advanced economy central banks do matters, and for us, we look at that and we say, if they are doing the following, what does it mean for the future flow of capital? What would it mean for the repricing of South African financial assets, and that repricing of South African financial assets doesn't just come through the bond yields and the stock market, but it also comes through the exchange rate. And then we then have to say, is the shock to the exchange rate a temporary phenomenon? Can we see through that, or should we act on that? On the commodities, commodities are a double-edged sword for South Africa. In other countries, I'm cognizant, might be in a different position. To the extent that there is an upward commodity cycle, and all commodities are going up, our import bill for oil could go up. but we will also benefit from iron ore, from coal, from platinum group metals, and so forth. And so one of the things we watch closely is what then happens to the terms of trade. And that becomes a very important variable in then feeding into our own response function.
Thank you. We're shifting slowly to, we're becoming a bit more forward-looking and the outlook. So South Africa seems to be going right now through, a positive upswing. The electricity outages have diminished incredibly. I mean, we're to the point where you haven't had any outages, which is, fostered quite a bit of pickup in confidence. More broadly, new capacity has come in. There's more political certainty. Walk us through that and how you see the prospects going forward. Upside risks, more downside risks still?
Our assessment had been that in as far as inflation is concerned, and for both growth and inflation, our assessment had been that the balance of risks is actually stable. The risks are assessed to be balanced. We will go into a policy meeting and we will reassess those risks. The positive momentum has surprised many of us. But the issue of political uncertainty was not a South African phenomenon. This was a year of great elections. And there were elections everywhere. There was uncertainty. And what we had in South Africa was that in the run-up to elections, a lot of negativity was priced in. And a lot of the response by the South African financial assets had to do with the fact that what had been priced in as negative didn't materialize. That's one. Two has been that, I had seen coalition governments being formed elsewhere in the world. It takes forever, months and months. South Africa managed to put one together in 30 days, okay? And which also underpinned the reform agenda. And the constraints to growth are being dealt with one by one. We have talked about the energy side. It was not like we built new power plants. We didn't build new power plants. We got the existing power plants to function. Two, we brought a lot more renewables on board. We are South African after all, so when we have a big problem, we bang our heads and we will find a solution. And once we find a solution, we start another discussion about whether the solution was the right one, irrespective of the fact that it is yielding good results. So you will continue to have that noise in South Africa, irrespective of how this thing is working. And but again, logistics. You talked about commodity prices. Commodity prices are going up. South Africa might not be able to take full advantage of that because of the bulk commodities. We must sort out the logistics. Again, typical South African solution to South African problems. We had these problems in any other country. People will shout at the government and say the government must do something. There are parts of South African society that shout at government and say government must do something. But we are South African. South African business approaches government and says, here are what we propose as solutions, and then before you knew it, there are task teams between business and government to deal with each of the problems, broke them into chunks, secondment of people into government to assist the government to do that, and we can see the positive momentum, and the reform agenda is thus taking off. And if the momentum is sustained on reform, I would say that the risk to the growth outlook would then move to the upside rather than being assessed as balanced.
Okay. So do you see, for many years there's been this debate whether South Africa needed more structural reforms or more accommodative macro policies. Do you see this debate finally having shifted in one direction or another?
Well, this was a false dichotomy. You need both.
More accommodative policy also.
No, understand this. You've got to have macro stability. And for a long time, South Africa was a paragon of macro stability. But that macro stability also led to a false sense of comfort that we didn't want to do what we are supposed to do. The lack of the structural reforms meant that growth in South Africa, potential growth in South Africa had been eroded, and at the moment we only estimate potential growth to be at like 1.3%. You can put the stimulus
Anyway, yeah.
but then you hit the constraint very quickly. Even with a potential growth of 1.3, the output gap is basically for all intents and purposes closed. But you know, to think of it's either macro stability or structural reform is a wrong dichotomy. You actually need to build on macro stability and embark on structural reform at the same time. And it becomes particularly important for South Africa because we have to rebuild. Getting into the COVID pandemic, we had monetary policy space. Inflation was on target. The policy rate was positive in real terms. And when we experienced the shock, we could provide the monetary stimulus. And we moved rapidly in doing that. Same couldn't be said of fiscals. They didn't have the space, and so couldn't respond in the same manner as the response that we had seen in other countries. And result was that as the world was reopening from the great lockdown, as early as 2021, Tito Mboweni ended up on embarking on a process of fiscal consolidation immediately, and much to the chagrin of his colleagues who believed that he must be providing stimulus, and he said, no, we've got to do fiscal consolidation. And that fiscal consolidation has to continue because it is a precursor to building buffers to respond to future crises.
Okay. Thank you for that, Lesetja. So I want to broaden the conversation a little bit to the rest of the region, and one of the areas in which I think the framework, the monetary policy framework, differs so much from other countries in Africa is just how clean the inflation targeting framework is, and in particular how much the exchange rate is allowed to move. That's not at all the experience elsewhere in the continent. Tell me, I mean, of course there was a searing experience of having intervened to try and protect the exchange rate, the huge losses that you spoke about earlier. But if you could say a little bit about, you know, what it is that the SARB has learned is so important about having an exchange rate that is that moves and absorbs the various shocks that our countries are subject to, and how discussions go when you're meeting with your fellow governors that tend to lean against such exchange rate movements.
I'm afraid in the region there isn't much leaning against exchange rate movements, not because there isn't a willingness to lean, but because we just do not have the resources to lean against the movement in the exchange rate. You need lots of reserves to do that, and
or administrative measures.
If you are Asian and you have got lots of reserves, that is a policy option you have. But central bankers need a lesson in humility. The exchange rate is not one of the variables they control. Even those with massive reserves, they can lean, they can come in and they could influence these things. And it's a huge debate among central banks now, and not that the IMF helps with the thing, because you have come with a very nice frameworks with parameters. You can only do it if this is in place or that is in place or this is
talking in place. About the integrated policy framework.
Yes, there are so many qualifications and caveats that there is something in it for everyone. Okay, so it is a well-written document. So it's a well-written document, and you could pick up from there and see what can be done and what cannot be done. And for some of us who are cautious, we will tend to focus on the things that you can't do and say can't do those, and then see what do you learn from the things that that can be done. We took an approach that said the anchor of monetary policy is the inflation target. So the exchange rate is treated as a shock absorber. There are times when we have got positive terms of trade shocks and the exchange rate appreciates, and we allow it to absorb the shock. And during those periods, sometimes we would pick up additional foreign exchange because our seen in the integrated policy framework, one of the things is if the reserves are of are adequate, then you can do this. Our reserves are not quite seen as adequate, so when there is an opportunity that we could move towards adequacy, we would do that. And then if there is a deviation because the reserves are not adequate, we do not throw good money after bad. But we had also learned that. That's the first point. The second point is for South Africa, only about 30% of the trade in the rand exchange rate takes place onshore. The other 70% is offshore. So when you think about leaning against the wind and intervening, well, you know, we need people to help us everywhere. And so one of the days we woke up, there had been a spike in the rand, and we said, what had happened? But we turned out that the spike took place for 5 minutes, and it was blamed on Mrs. Watanabe. It happened, South Africans were sleeping, but by the time we woke up, the spike took place and the rand had also recovered. So again, the currency trades everywhere. And we have got a fairly deep foreign exchange market. And so when the central bank thinks about leaning against the wind, we have got to be cognizant of that. Just to round off this one, it's easier to act on your currency when your currency is appreciating, because you can accumulate the forex, okay, because you print your own currency. If it is the other way around, you don't print the FX, so you can your degrees of freedom are limited compared to the other side.
So if I could, I know we're running out of time, just on that point, are you comfortable now where reserves are, or are you still wanting to build reserves? And
well, our reserve level, it depends. You know, can use a number of metrics, and these metrics lead to different results. Our approach has always been that we need to build our reserves to the point where we do not look like an outlier compared to peers, and that's what the approach we take.
Thank you, Lesetja. As always, we get into the weeds of monetary policy and other issues when we get together, but always fascinating and always informative.
Thank you very much.
Thank you, my friend.
Conversation.
Likewise. Thank you. Thank you.